the Finance Ministry has just made an announcement that remember there were 34% tariffs on all US goods coming into China. That's now been increased to 84%.
President Trump is now promising a new 50% tariff on China on top of the other new tariffs, which are on top of existing tariffs. Combined, this would make U.S. tariffs on imports from China a whopping 104%.
That includes a 104% tariff on China, which, by the way, has responded this morning by hiking their tariffs on U.S. goods to 84%. That is up from the previous 34%.
Trump in panic mode. A financial storm on the horizon? On April 9th, President Trump made a dramatic move by suspending most of the tariffs imposed on U.S. trading partners for 90 days, a decision that came as no surprise. The U.S. stock markets reacted instantly, surging in optimism, but the celebration was short-lived. In what many see as a critical oversight, Trump's gesture excluded China.
China.
Far from offering relief, he escalated tariffs on Chinese imports from an already staggering 104% to 125%. China, responding with swiftness and precision, imposed an 84% tariff on U.S. goods. But that was just the beginning. According to credible reports, Beijing is now contemplating an economic maneuver that could shake the foundations of global finance, selling its massive holdings of U.S. Treasury bonds, estimated between $900 billion to $1.1 trillion. If carried out, this move could be nothing short of a financial atomic bomb. At this pivotal moment of intensifying trade friction, the world's two largest economies find themselves at crossroads. China's signal to potentially offload U.S. bonds has sent tremors through Washington and ignited fears of a global financial upheaval. What does this imply? Why is Beijing now eyeing its strongest financial weapon? And why are U.S. markets reacting with sheer panic? Let's delve into the depth of this evolving crisis, exploring expert insights and the global repercussions of such a bold step. For years, the idea of China dumping U.S. bonds was considered improbable. The financial interdependence between the two nations was too strong, and Beijing's reserves were seen as too valuable to risk. But the rekindled trade war since April 2nd has shattered those assumptions. Internal memos circulating on social platforms suggest Chinese authorities have instructed banks and financial institutions to scale back dollar purchases. Reports also indicate that China has already begun quietly reducing its treasury holdings, a foreboding sign of what might lie ahead. Experts caution that if China proceeds with a large-scale bond sale, it could send shockwaves through the U.S. economy. Financing costs would skyrocket, the dollar could weaken, inflation would rise, and American markets would feel the jolt. This is the essence of the economic atomic bomb analogy echoing across social media. China has long been a primary buyer of U.S. debt, using its foreign trade surplus to invest in Treasury securities. This not only helped finance America's deficits, but also preserved China's reserves. However, with Trump's aggressive tariffs, Beijing appears ready to retaliate by playing its ultimate card. British media sources confirm a significant sell-off in U.S. bonds, causing yields to spike and unsettling Wall Street. The epicenter of Trump's tariff war has shifted from trade to finance, and it's rattling investor confidence globally, while China would suffer losses too, due to a potential drop in the value of its remaining U.S. assets. Some analysts believe Beijing may be willing to absorb that pain if it means cornering the U.S. financially, especially if this battle drags on, weakening the very fabric of economic interdependence that once defined their relationship. On a broader scale, China's move to reduce dollar reliance could be part of a long-term strategy to diversify its reserves, promote the digital yuan, and prepare for future sanctions. Thus, this may not be a mere threat. It might reflect a decisive shift in economic direction. Markets are already reacting with alarm. Fears of rising interest rates and inflation are leading global funds to pull out of U.S. bonds. As panic spreads, even the dollar is feeling the pressure. Trump, while asserting that America will win the trade war, has also left the door open for negotiations, saying he's waiting for a call from Beijing. But China insists lift the tariffs first. This high-stakes standoff leaves little room for compromise. Should China unleash its financial weapon, the consequences could be severe. Interest rates could soar, the housing market could falter, and recession risks would deepen. Some observers argue that Beijing might opt for a gradual sell-off to send a strong signal, without triggering total collapse. Others believe it may go all in, viewing this as a necessary counter to Trump's policies. Either way, the financial markets are on edge and global leaders are watching with apprehension. U.S. lawmakers are beginning to voice concern. If China dumps its bonds, some warn, we could face a recession. And while the sheer size of the U.S. bond market might absorb some of the shock, a sudden exit by a player like China would undoubtedly cause turbulence. Even more alarming is the ripple effect this might have across the world. Japan, European nations, and other U.S. debt holders are wary. If yields rise sharply, global financing could be disrupted, pushing investors towards safer, alternative markets. In short, what started as a trade dispute is now threatening to become a full-blown financial crisis. Some liken it to the 1930s, where protectionist policies led to the Great Depression. Others argue we live in a different era, but no one is taking the threat lightly. China has said it wants a deal, but Trump insists on keeping pressure. With both sides showing no sign of retreat, the prospect of a financial showdown looms large. The world is left wondering, is Trump bluffing or will he double down? And will China truly go through with its bond strategy? If it does, we could witness the unthinkable. A financial earthquake rippling through Wall Street main streets and stock exchanges across the globe. Stay tuned, because every move in this escalating economic battle could reshape the future of the global financial system.